Welcome everyone. Welcome to Commodities Outlook 2025. I have with me, of course, Mr. Saif Mukaddam, who is from our Commodities Research team. And this is especially very interesting episode. We are going to we're going to look after the entire year 2025. What is going to happen? What has happened in the past year? And there is so much learnings from this episode. So without much further ado, I'll hand over the mic to Mr. Saif. Saif, we are here to learn क्या लगता है क्या होगा commodities में in 2025.
Okay, thank you, Vishu. First of all, everyone, Happy New Year, and let's start with the New Year or 2025 with a bright silver and gold prices. I hope we get good returns as what we have seen in 2024. So before let me share my presentations. What we have released a report, and accordingly we'll speak about particular commodities step by step, and we'll see what are the major fundamentals, what are the levels which has to be seen. So let I will share the presentation. Um, I hope you can. I wish you can see the presentation right now.
Yes, I can.
Perfect. Okay, so let's begin yearly outlook for 2025. First of all, uh, let's see from what are the levels which we are looking forward to in 2025 for the different commodities. The global volatility will keep precious metal in limelight. So for this year, we are expecting gold prices to rise toward 85,000. The reason behind it would be the strong central bank buying and trade war concerns. Silver, we expect it to rally till 110,000 on market deficit and industrial demand. Crude oil prices, we expect it to remain under pressure because of the market surplus. Copper, likely to slip towards 690 on MCX due to demand concerns from China. And aluminum prices on MCX, we expect it to rise to 280 on market deficit. So before going to 2025 outlook, let's see what happened in 2024 in various commodities. If we see, the gold prices had rallied sharply in 2024, and it had all-time high of $27.90, which is a gold spot gold I'm talking about. The reason behind was US Federal has reduced its rate by 100 basis point. Other major central banks were also cutting down their interest rates, easing the monetary policy. Then demand for the safe haven we have seen due to rising geopolitical tensions and uncertainty surrounding US president elections. These were the major reasons why the gold prices had rallied sharply in 2024. Internationally, the base metal prices we saw ended on the positive note. The major reason behind base metals to perform were a slew of stimulus packages which were unveiled by China to revive its economic growth. And further again, the monetary easing from major economies also supported the prices. On MCX front or on the domestic front, if we see, the rupee depreciation also helped the prices to gain further. Crude oil, we saw a very eventful year. We saw crude oil prices ended on the positive note, majorly because of the geopolitical tensions rising, escalating in the Middle East as well as in the Eastern Europe, which is Russia and Ukraine. So those were the major reason why we saw an eventful year for the crude oil prices. Again, OPEC delayed its planned output hike to 2025. While the demand concerns still remained in the market from the China, so the sharp upside movement in the crude oil prices were kept. This was the what happened in 2024. Now let's go ahead what we are seeing in 2025. Now, before going to particular commodities, let's see which are the major factors which will be impacting commodity prices in 2025. There is one is in inflation, one is strong the dollar index, another is the rate cut expectations from major central banks. Then we have got Chinese, the global economic growth. Chinese economy faces the risk of trade war and geopolitical tensions. Now, in this slide, we have mentioned like what are the expectations about the inflation. We expect inflation in US to remain above the 2% target. That the reason behind is the strong growth and inflationary effects from the new policies which after Donald Trump comes up sits on the chair. The new policies which would be taken, bringing by him on immigration or on trade or the tax, that are expected to be an inflationary. So that's the reason why we expect US inflation to remain above the Fed's 2% target. The negative effect of this would be the US Fed will not have much space to cut the interest rate the way it has done in 2024. So we expect US Federal Reserve to go ahead with a 50 basis point cut in 2025 compared to 100 basis point which was seen in 2024. While European Central Bank in Europe, if we see the inflation is likely to go below the central bank's target of 2%, and that's the reason why we expect ECB to continue the trend of cutting down its interest rates as it did in 2024, and expect to come from 3% to 1.75%, which we can see in this chart in red line. Then this trend, we see dollar index to remain stronger. That is, which I've already mentioned, that the policies which, like from the Donald Trump, once he sits on the chair, the immigration and trade and the tax would be spurring inflation. So this will, and again, the trading partners of US will face the risk of higher tariffs, which will be hurting the economic growth and widening the interest rate differentials with US. So these are the major factors which will be supportive for the dollar index to move on a higher levels. Then Chinese economy faces the risk of trade war. As we know, the during the campaign that Trump has said he would impose the tariffs of 10% on imports from all countries, whereas 60% or more on goods from China. And if we see the China is already witnessing some kind of slowdown because of the they are facing the economic slowdown right now, and the resumption of the trade war and prolonged housing downturn will have a negative impact on the Chinese economic growth. And in 2024, if we see, the exports have worked as a main source for the growth for Chinese economy, and increased tariffs will damage that recovery. So then again, the geopolitical tensions which we are seeing right now is in Russia and Ukraine and in the Middle East, Israel, Iran, and Houthis, and the from Lebanon, the Hezbollah. So these are the major geopolitical tensions which we are seeing in the Middle East. So this will have impact on the overall on the commodity prices. So this were the major five factors which we are looking into, which will have a negative, which will have an impact, not a negative, but it will have an impact, whether a positive or negative, on the different types of commodities. Now let's go ahead and see different into specific commodities and the specific fundamentals of the commodities. Let's go ahead with the Bullion outlook. In Bullion, we have covered gold and silver. Gold prices, we are expecting it to make a new high of 85,000. The major reasons are safe haven demand. As we have already spoken, the geopolitical tensions are still prevailing in the market. There's a fear of a potential trade war, which would be hurting economic growth. So the demand for the safe haven would be seen. Then again, the major central banks are still easing their monetary policy. Maybe the US Fed would reduce the pace, but still it would be easing its monetary policy as well. Like European Central Bank will continue its easing. Bank of England will continue to easing. Then geopolitical tensions still prevail in the market. That will make the gold as a hedge against uncertainties. Additionally, the major reason for the gold prices to move in a certain way or be on a upward move is majorly the central banks are likely to continue with their buying spree to diversify their reserves. The concern to the gold prices to is like a strong dollar and the rise in US Treasury yields, which may provide a headwinds to the gold prices. So the Trump proposed policies are inflationary, which I have already mentioned, which would limit the 2025. So this is the headwind for the gold prices. Overall, the gold prices looks to be on the positive side, and it will be going ahead till 85,000. In this slide, we have covered majorly all the charts. If you go to see the red portion shows how the central banks and other institutes, the demand of gold is increasing. This is the top central banks. If you see how the gold purchase was done since 2022 in tons. So how the different, like China, India has been adding the gold to the reserve. So you can see how China being again in 2020, China being one of the top buyer, adding around 34 tons. And looking at the current scenario, we expect central banks to continue buying the gold to diversify their reserves for financial or strategic reason, and even the China to continue buying the gold as its reserves is low amount relative to another FX assets. In this slide, we have again showed how the interest rates are expected cut in the interest rates would be seen in from US, like from 4.5, they're expecting it to come down till 4. And the inflows likely to continue in the gold ETFs because of the demand for the safe haven will continue. We'll see fresh investment demand may kick in 2025 due to the concerns over the trade war. So this were the major fundamentals for the gold prices, why we expect gold prices to move on the upper end. Silver, we expect silver prices to rally further towards 110,000 levels. The major reason would be rising industrial demand. And again, the market is expected to remain in deficit for fourth consecutive year. This would be the fourth consecutive year where the silver market will remain in deficit. So that's again a positive point. Now, if we see in from the industrial side, the demand is increasing due to green economy application, particularly photovoltaics, electrification of vehicles, EV, investments in infrastructures as charging stations, power grids, and rapid adoption of AI technologies. So the demand in the industrial sector is growing and will continue to grow. That will be very supportive for the silver prices to go ahead. Again, the investment demand may surge aimed at rate cut across major economies. Moreover, the stimulus packages from China is expected in this year, and again, elevated geopolitical tensions will be supportive as a safe haven demand will also be seen in the silver. So we expect silver prices to go on MCX to 110,000 levels, whereas on international level, if we see the spot silver may go ahead till $37 to $38 in the coming months. I'm sorry, for the gold, we can see 2,900 to $3,000 on the international market. The spot gold may go ahead with that level as well. Again, in this slide, we have shown the fundamentals about how the demand expected to surpass supplies for fourth year. If you see in this blue line, which is shows demand. So demand is increasing, whereas the supply remains flat, you can say. So the demand is higher. The market is expected to remain in deficit. And there is again the silver demand is expected to rise across the segment, whether you take it jewelry or silverware or physical investments or industrial demand. So this will be very positive for the silver prices. In this slide, if we see the silver demand, we have shown how it is rising in photovoltaics sector. If we see, it is increasing drastically. And again, in the industrial sector, if we see, there has been a growth of like 7%, this surpassing 700 million ounces for the first time. So the demand from the industrial sector is huge. That will be very supportive for the silver prices. And again, if we see the ETF, silver ETF iShares, it is again rising, which will be supportive. Like there will be more investments demand would be happening maybe due to rate cut across major economies, more stimulus packages from China, and elevated geopolitical tensions. This shows a gold silver ratio, which is standing around near 89 to 90. We expect it to come down till below 80 level. That shows that silver will outperform gold in 2025. This was about the bullion. Now let's go ahead with the energy. In energy, we have covered crude oil. Now let's see what we are looking in the crude oil. The crude oil prices we expect it to range in the WTI crude oil, that is NYMEX, we expect to range in the level of 60 to 85 level, $60 on the downside and 85 on the upper hand. We expect crude oil prices to remain under pressures due to market surplus. Again, the market is expected to remain in surplus despite of OPEC members stealing its production increases. The growth in oil production will come next year mostly from the non-OPEC countries. Additionally, if we see, the OPEC is sitting on a sizable spare production capacity. So even if there is any event which creates a supply disruption, the OPEC has the capacity, a sizable capacity to protect the market. Even moreover, the potential trade war in the Donald Trump's second term will have a negative effect on the economic growth. So that will be hurting demand. So that's the reason why, again, we are looking the crude oil prices to remain under pressure. Only risk to the prices would be the disruption oil flows through the Strait of Hormuz, which as the Persian Gulf supply move through this route. The Strait of Hormuz, if say after the Donald Trump comes into the power, takes the chair, and if he puts some kind of sanctions on the Iran, and Iran wants to retaliate through blocking the Strait of Hormuz, then we may see some disruption in the oil, and the Strait of Hormuz is very important because most of the Persian Gulf supply moves through that route. So M6 crude oil prices, again, we expect it to go ahead. below to 5,200 levels in the coming months. We expect crude oil prices right now to remain under pressure. In this slide we have shown that why we expecting, like, the crude oil market to remain in surplus in 2025. Then how the US production is rising, and even the friendly policies, oil policies, will boost the US production and may even go beyond the projections. So that is again positive. OPEC is already planning to increase its supply at a slower pace, which may take 18 months to return the supply of 2.2 million barrel per day of voluntary output cut and next year. And it has also extended 3.65 million barrels cut until the end of 2026. So all this will be coming into the market again, this oil supply, but it will take slower, at a slower pace. It will take some time, but it will be coming back into the market. And then if you see the, as already mentioned, the China's economy, there's a concerns over the slowdown again due to the uncertain outlook for the Chinese economy, as the real estate and construction downturn continues to drag the economy. And again, the potential trade war in the Donald Trump second term will have a negative effect on the economic growth on China. So that will have a negative effect on the demand from China for the crude oil. So overall, because of all these factors, we expect crude oil prices to remain on the negative side in the coming year or in 2025. See, now this is the slide which I am speaking about, the Strait of Hormuz, which is considered to be the most important oil transit route because it's 20% of global consumption flows through this route. And these are the other straits through which the crude oil moves. So major, like 20% goes from the Strait of Hormuz, and that's the reason that this is a risk if only if Iran thinks of retaliating and blocking the Strait of Hormuz, then we may witness a supply disruption. Otherwise, overall, the supply is surplus, and all the factors, all the fundamentals, are targeting towards a downside in the crude oil prices. Now let's go ahead with the base metal outlook. In base metals, we have covered copper, aluminum, lead, and zinc. So let's start with the copper. We expect copper prices to slip back towards 690 on M6 level. That is majorly because of the demand concerns from China, as we have already spoken before also that Chinese economy is already facing weak domestic consumption and in prolonged property prices and deflation fears. And the Donald Trump victory has added more concerns with the threat of tariffs on Chinese products. So overall, the demand from concerns will be there from China. That will be negative for the copper prices. Again, the refined copper market is forecasted to remain in surplus. The copper stocks held at major exchanges remain elevated, signaling well supplied market. So these are the major factors which will have a negative impact on the copper prices. However, if Beijing unveils the stronger than expected stimulus packages to revive the economic growth in China, which he has already been speaking on, if they come up with a stronger than expected one, then we may we may not see a sharp fall in the prices. There will be a cushioning in the prices, and it will not allow the what we are expecting the copper prices not to go beyond 690 levels. Right now, we are expecting it to go till 690 level as long as it's faced the resistance of 860 levels. Here again in this chart, we can see the Congo, from where the main the world copper mine output is increasing, which is expected. The overall world copper mine output is projected to increase. That is majorly because of the capacity build-up at mines in Congo and Mongolia. Additionally, another X number of expansions and medium and small mines will also add to the production. Copper market refine is expected to remain in surplus, which again will have a negative impact because of the expansion of Chinese capacity and ramp up of new smelters. Um, in this slide, if you go to see the looming US tariffs to threaten economic growth, which we have already spoken, the negative impact of trade war on the China and how it's going to be impacting the demand for the copper or the base metals. So we have already spoken about this, and so that these are the major fundamentals or the major reasons why we are expecting the copper prices to remain on the downside side. Now let's go ahead with the aluminium. Why we expect to see the aluminium prices to rise to 280 level? My measure is one of that it's expected to remain in deficit. The Russian aluminum producer Rusal plans to reduce output by more than 6% due to soaring cost of aluminium. Then again, if we have seen the China has removed the export tax rebate, so that will restrict the flow from the country. So that will create uh, a deficit, you can say, in the market. So that will be a negative again. Sorry, I mean to say a positive for the prices. Inventories at aluminum registered warehouses are diminishing. That will be a positive again for the aluminum prices. Additionally, the demand is rising from EVs or renewable energy and electric grid infrastructure. That will be supportive for again the aluminum prices. MCX aluminum is likely to rise back towards 280 level if it sustains about 210 level. In this slide again, we have mentioned the same, we have given the why, we have seen shown the how the inventories are moving right now. We are expecting the market balance to remain in deficit this year. The demand is expected to be higher compared to the production. And if you see the output cut which took place in Europe since December 2021 have begun to restart, but we don't see a new restart or the huge significant capacity to come back soon because of the rising aluminium prices. And that's it for the aluminium. We expect aluminium prices to remain positive. This was the positive outlook for LU. Let's go ahead with the lead and zinc. If you go to see lead, is majorly is expected to again the refined lead supplies is focused to surpass demand, leading to the market surplus for third consecutive year. And again, if you see the inventories are near 11-year high. Again, so these are the major factors which will have a negative impact on the lead prices. So we expect lead to come down till 160 level as long as it trades below 190 on MCX. And meanwhile, sharp downside may be cushioned as there's an expectation in the markets that the China may come up with the stimulus packages to revive the economic growth, which will lift the sentiments for the automotive sector. So that will be slightly positive for the lead prices. See, the Chinese stimulus package, if it comes more than the expectation, then it will prevent a lot of base metal prices to go down, like copper, lead, and zinc, and it will prevent downside levels, and it would be give some support for the prices. Um, Again, in this slide, we have covered the same thing, like how it's going to be the market balance will be in the in surplus for third consecutive year. In this chart, we can see the demand and is lower and the production is higher. Again, here the inventory levels we see at 11-year high. It's rising, so that will be again a negative for the lead prices. Let's complete with the zinc. Zinc, we expect it to come down till 240 levels on MCX as long as it sustains below 300 level, and that is again the zinc market is expected to remain in surplus this year. The zinc is majorly used for the galvanizing of the steel and the construction. And if you see the continued weakness in the property sector in China is hurting the demand for zinc. So overall, this is a negative for zinc prices. Again, the China's new home starts, if we see, continue to fall, surpassing the demand for the steel. So overall, these are the major factors which are impacting zinc prices. Again, inventories at LME are rising, started climbing. So this will have a negative impact on the zinc prices. So we expect zinc prices to remain on the lower side and come down till 240 level on MCX. If you see the Chinese property market will be a drag on the demand. There's a Chinese slump in the Chinese property sector continuously, so that will have a negative impact on the zinc prices. Uh, and again, if you see the China's Metallurgical Industry Planning and Research Institute demand for steel is expecting the demand for the steel to contract by 1.5% in 2025. So overall, this factor shows that the zinc prices to remain on the downside. In addition, I have just shown the how the US-China trade war timeline looks like during 2018 to 2019. These are the timeline where how the tariffs were imposed on the imports of Chinese imports. And in the slide, we can see how it has a negative impact on the imports. The imports fell from China and slipped after the tariffs and and after that it declined sharply due to these. This is the pandemic level when it had a sharp hit, and it still remains below the trade war trend. If you go to see over here, it still shows that it still remains below that. And during this trade line, if you calculate from July 2018 to September 2019, if you can see, the gold prices have rallied more than 18% and copper prices have declined by 14%. Whereas on the currency side, we see the dollar index had rallied sharply by almost 5%, and yuan has depreciated more than 5%. So if this happens, if we see more trade war concerns coming up ahead, as he has already said, it will be imposing more than 60% on China, and so it will provoke the targeted countries to retaliate, straining international trade, and to offset this impact of the heightened US tariffs, China may allow yuan to weaken further and unveil more stimulus and fiscal measures. So that's it. Thank you, everyone, for listening to the 2024 outlook on commodities. Wish you.
Absolutely. Yeah. If I may ask a few questions before we close,
Perfect.
to kind of get the crux of this outlook, what would you say is the takeaway here? Should we start accumulating? Should we hold on for a while? Should we sell right now? How would you summarize this intensive piece of research?
Okay. Sure, Vishu. See, right now the gold and a person can start accumulating gold and silver right now as well. Even if it comes down in the in this quarter, whatever the level it comes down, so even in gold and silver, start accumulating on the dips. I would suggest until unless it does not gold does not go below 70,000 or 70,000 levels, because below 70,000 it will have a downside trend, you can say. But I would suggest the people can start accumulating gold at this level as well, and even if they get some dip below, we even in the same thing as with the silver, people anyone can accumulate right now, and even in whenever there is a dip, the person should accumulate, because in the coming year 2025 we will see this levels ahead. Even if the gold prices sustains about 85,000, we may even see 87,000, but right now we are expecting it till 85,000. So that's a good level, and we expect silver to outperform gold in this year 2025.
Absolutely. Awesome. Awesome. And finally, before we close, of course, if you could leave a final piece of advice or a concluding remark for our viewers out there, what would it be?
I would say whoever is trading on futures or options, I would suggest them to please maintain stop losses whenever the analyst recommends, gives you the calls. If you follow that, maintain proper stop losses so you don't make huge losses in that. That helps you to minimize, so that's major thing which a person should look into. That's my advice. Please follow these stop losses.
Evergreen advice. Well, that was it for this time. Thank you so much, Saif, once again for taking out time for us and taking us through your outlook. We'll be back again with more such learning content. But if you have any questions for Saif, please do comment them down. We'll try to get back as soon as we can. Thank you so much for watching, everyone.
Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.